Have you ever wondered why Bitcoin, a virtual currency with no physical form, has been on a meteoric rise? This question has stumped many around the globe as they watch the value of this digital currency soar higher and higher. To understand this financial enigma, let us first delve into what Bitcoin is. Bitcoin is a decentralized digital currency, meaning it operates without a central bank or single administrator. The transactions are peer-to-peer, with no intermediary. This concept was a novel idea when Bitcoin was first introduced in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto. At its inception, Bitcoin was worth virtually nothing. The first notable transaction involving Bitcoin was in May 2010 when a programmer bought 2 pizzas for 10,000 Bitcoins. Yes, you heard that right, 10,000 Bitcoins for 2 pizzas. If we fast forward to today, those same 10,000 Bitcoins would be worth millions of dollars. But why has Bitcoin's value skyrocketed? The reasons are multifaceted and complex. Some attribute it to the scarcity of Bitcoin, as there will only ever be 21 million Bitcoins in existence. Others point to increasing demand, as more and more people become aware of this digital currency and its potential. Still, others believe that the technology and security behind Bitcoin are driving its value. Bitcoin's rise is not without controversy. Its volatility and the potential for misuse have raised concerns among financial experts and regulators. Yet despite these concerns, Bitcoin continues to rise in value, reaching unprecedented heights. This intriguing phenomenon of Bitcoin's rise has piqued the interest of many. From financial experts to everyday individuals, people are eager to understand the forces driving Bitcoin's value. They want to know if this is just a bubble waiting to burst, or if Bitcoin is here to stay. Let's dive into the intricacies of Bitcoin's soaring trajectory. In the upcoming scenes, we will unravel the mystery behind Bitcoin's rise, exploring the power of decentralization, the role of scarcity and demand, and the impact of technology and security. Stay tuned as we dive deeper into the world of Bitcoin. At the heart of Bitcoin's rise lies a revolutionary concept: decentralization. This principle stands in stark contrast to the centralized financial systems we've known for centuries. So what exactly does decentralization mean? Imagine a network, an intricate web of connections and interactions. In a centralized network, one central authority holds all the power and control. Think of a bank controlling your money, or a government controlling your identity. If this central authority fails or decides to misuse its power, the entire system can crumble. Now imagine a different kind of network, one where power isn't concentrated in a single entity, but distributed evenly among all participants. This is what we call a decentralized network. It's like a spider's web. Cut one thread, and the web still holds. This is the fundamental concept underlying Bitcoin and other cryptocurrencies. Decentralization offers a host of benefits. First, it reduces reliance on central authorities. In a decentralized network, no single entity can control or manipulate the system. That means no more bank fees, no more government surveillance, no more arbitrary rules. Second, decentralization enhances privacy. In a world where our every move is tracked and recorded, Bitcoin offers a breath of fresh air. Your transactions are known only to you and the person you're transacting with. No third parties, no prying eyes. Lastly, decentralization fosters global accessibility. Anyone, anywhere, with an internet connection can participate in the Bitcoin network. It doesn't matter if you're in New York or New Delhi. Bitcoin is open to all. These are just a few reasons why decentralization has been pivotal to Bitcoin's rise. It's a bold new way of doing things, challenging our preconceived notions of power and control. It's a paradigm shift, a move away from the old and towards the new. Decentralization has given Bitcoin a unique edge, but that's not the only factor fueling its rise. As we delve deeper into the story of Bitcoin's ascent, we'll uncover the other driving forces behind this digital gold rush. Stay tuned, the plot thickens. In economics, scarcity often drives value, and Bitcoin is no exception. As we delve deeper into the world of Bitcoin, one concept that stands out starkly is its built-in scarcity. Just like precious metals such as gold, which have limited quantities on Earth, there is a finite number of Bitcoins that will ever exist. This scarcity is a fundamental aspect of Bitcoin's design and contributes significantly to its value. Imagine you're in a world where diamond is as common as gravel. Would you still pay a hefty sum for a piece of diamond? Likely not. The same principle applies to Bitcoin. There will only ever be 21 million Bitcoins in existence. This limit is hardwired into the Bitcoin protocol, and that's non-negotiable. So how does this scarcity contribute to Bitcoin's value? Well, it's simple supply and demand. The more people want something and the less there is of it, the more valuable that thing becomes. Bitcoin's scarcity is a significant factor in its rising value. But it's not just about the limited supply. It's also about the predictable rate at which new Bitcoins are created. This is done through a process called mining, where powerful computers solve complex mathematical problems, and in return, miners are rewarded with new Bitcoins. But here's the catch. Approximately every 4 years, the number of new Bitcoins created and earned by miners halves. This event is known as the halving. This halving mechanism ensures that the total number of Bitcoins in circulation will approach the 21 million limit, but never surpass it. It also means that as time goes on, the rate of new Bitcoin creation becomes slower and slower. In this way, Bitcoin mimics the process of mining gold. Just as it's increasingly difficult and costly to mine gold, the same is true for Bitcoin. This digital scarcity is one of the key reasons why many people compare Bitcoin to gold and consider it a form of digital gold. Scarcity is a core component of Bitcoin's value, but there's more to the story. Like any market, Bitcoin's value is heavily influenced by demand. And demand for Bitcoin has grown exponentially over the years. But what's behind this surge? Well, there are 3 key drivers: institutional investors, business adoption, and public interest. Firstly, let's talk about institutional investors. These are the big players, the financial institutions and hedge funds, who have traditionally been skeptical about Bitcoin. But as the cryptocurrency market matures, more and more of these institutional investors are starting to see its potential as an asset class. They're buying Bitcoin in droves, and this kind of large-scale buying naturally drives up the price. Next, we have business adoption. More and more businesses are starting to accept Bitcoin as a form of payment. You can now buy everything from a cup of coffee to a luxury car with Bitcoin. This widespread business adoption means that Bitcoin is becoming more mainstream, more accepted. And as its use becomes more widespread, so too does the demand for it. Finally, we have public interest. The rise of Bitcoin has been a hot topic in the media for years now. Every time there's a price surge, it's all over the news. This media hype fuels public interest, which in turn fuels demand. Everyone wants a piece of the action. But it's not just these tangible factors that contribute to demand. There's also a lot of speculation involved. People buy Bitcoin with the hope that its value will continue to rise. They're betting on the future, and this speculative buying can significantly inflate demand. And there's another factor that we need to consider. Bitcoin's value isn't just driven by demand, it's also driven by its finite supply. There will only ever be 21 million Bitcoins in existence. As demand grows and supply remains fixed, the price naturally goes up. So demand plays a crucial role, but what happens when you mix in technological innovation? Well, that's a question for the next scene. Stay tuned. Bitcoin isn't just a currency, it's a groundbreaking technological innovation. Now let's delve into the technical side of things. Bitcoin's backbone is a technology called blockchain. This technology, while complex, is what gives Bitcoin its unique value proposition. Think of blockchain as a digital ledger, a ledger that is not stored in one centralized location, but distributed across a vast network of computers, known as nodes. Each node has a complete record of every single transaction ever made on the Bitcoin network. This makes tampering with the data virtually impossible, as any alterations would need to be made on every single node simultaneously. This, as you can imagine, is a Herculean task. This decentralized nature of blockchain ensures a level of security that is unmatched in the digital world. It's like having an army of vigilant guards, watching over your transactions, making sure they are secure and tamper-proof. But that's not all. Beyond security, blockchain brings an unprecedented level of transparency. Every transaction is visible to anyone who wishes to see it. This means that while your personal details are kept private, the movement of Bitcoin is traceable and open for verification. This transparency fosters trust, an essential ingredient in any financial system. Now combine this security and transparency with the scarcity and demand we discussed earlier. You start to see why Bitcoin is such an attractive investment. It's not just about the potential for high returns, it's about participating in a financial system that is secure, transparent, and free from the control of any central authority. A system that, for the first time in history, gives the power back to the people. The rise of Bitcoin is more than just a financial phenomenon. It's a testament to the power of innovative technology to disrupt traditional systems and pave the way for a more equitable financial future. So there you have it. a potent mix of decentralization, scarcity, demand, and technology that creates the perfect storm for Bitcoin's rise.